Hey everyone, it's Linux Man. You call me Micah. It's been a while. It's October and October, and everyone is so excited. Stock markets are ripping to all-time highs, but at the same time, I'm playing it safe. All right. So I've been doing, right? If you watched my last video, it's the wheel strategy, right? So quick review again of the wheel strategy is you put sell puts, right? These are actually called cash secure puts. So I put up, essentially think of these as limit orders. So I'll set these limit orders up on red days. So I'll put them like 2, 3, maybe a month of timeout. So I pretty much lock 100 shares of a price that I want to buy a stock at. And I lock it away for a couple of weeks and collect free income on that. So that is called a cash secure put. You get paid to essentially run a limit order that you'll hold for a few weeks. All right. So if the stock, so the stock could go above, below your strike price, but what really matters is when it expires. So if the stock goes below my strike price on expiration day, then I'll be assigned the shares, right? So I mean that's pretty good because I agreed to buy the stock anyways at that price. I'll have to buy the 100 shares with my locked up capital. And with that, I still got paid the premium to agree to buy the stock. So actually, the Robinhood does a nice job. It tells you the break-even price of the stock will be actually lower than your limit order. So that's a good thing. If it doesn't get assigned, you collect your free money, you run away with the free money, and then you wait for another red day maybe, and you do the whole thing again. That's half the wheel, okay? So you keep doing that to collect premium, right? Passive income. So what happens if you do get assigned? You will own the 100 shares, and what I will do is I will wait for a green day, right? If the stock goes back up, the premiums for the stock, for the cover call will go up. So then I will say, hey, I'm happy to sell these stock at this certain price, and hey, pay me. You're gonna be paying me this amount of premium, right? I'm an option seller. I sell these option contracts. I get paid premium, like a good premium deal when the stock goes up on the stock I own. So I'll set up, hey, I'm gonna put my 100 shares up, agreeing to sell at a certain price, right? That's the opposite of a cash secure put. Cover call is I have 100 shares and I agree to sell this stock at a price that I'm happy to, and I'll collect a premium. So red days, the rule is red days, cash secure put, you get the best premium and risk to reward, and green days, you put cover call, you get the best premium for that. Okay, so let's go to an example that I've been doing. So I have a new port right now. This is like my college funding port, right? I'll show you pictures of my other port. I have a Roth port and a bigger port that I'm running wheels on, and it's doing pretty well. So if you go out to 3 months, right, I actually made like $200 just running wheel because I didn't know what stock to buy, right? And the benefit of running wheel is, right, I collect premium, right, like every few weeks, and I could use that to reinvest into stocks I want, right? Daily DCAs, these add up over time. So this is just a new port I have, right, from 3K. I added around $1,000, I guess, or a few hundred, and now I'm 4K. So I want to bring this stock port, this baby college stock port, up to 5K, and my challenge is to trade this slow and steady, alright, slow and steady to 10K using my wheel strategy. And I've been investing into Southwest Airlines. You can take a look into it. So every day I put $5 into it, and my wheel pretty much can pay for these small daily invests, right? Look at that. I already have $283. I started this in June. So when you get profits from the wheel strategy, right? So it's really nice. You could keep your cash really liquid, right? Every few weeks you collect premiums on your cash. I'm pretty much bear market ready, alright? Hopefully that's the way it is, right? So hopefully I could keep up with the market with the wheel strategy, and as long as I do this properly, I could use that like a bucket, right? I'm going to take the profits, and it's gonna be able to I'm able to use the free profits, like the free cash flow, to invest daily DCA, right? Hopefully this sparks some idea into how you want to invest long term, how you want to invest DCA into a good company you want to hold for many years. So LUV, Southwest Airlines is an airline company, all right? So there's lots of fear right now on like Boeing planes 737. They exclusively run 737s, and that's actually a good thing in my opinion because the business management is simple, right? They only train pilots exclusively to use 737s. Their destination routes are really few, like the fuel economy, right? The fuel efficiency is like they pick the best routes. So that's why I invest $5 a day, and they pay me dividends into it, all right? So you can see I'm getting a paid dividend of 2.21. So that's how I run Wheel. So hopefully that sparks some ideas in your mind, right? Generate free cash flow, and then I could invest into stocks I want. I could market buy good dips, right? Say Amazon drops a little bit more, I could start investing into Amazon, right? So I love keeping my cash flow really liquid. This stock was really good to run cash secure puts on. It paid really good premiums on red days, right? Every time I saw one of these two lake downs, I'm like, yes, let's run a cash secure put around like $9, $8. I kept doing that, and I wish I got assigned more shares, but my main port, I got assigned only like 5 contracts, so around 500 shares of Archer Aviation. So I mean, now look at that, I'm pretty much up. I'm up a lot, so I could run cover calls on my shares to collect even more premium. It's a really simple strategy, right? So stock could chop sideways, right, up and down like that, and you could collect lots of premium on stock that doesn't do anything. And the risk to reward, right? Say path, you just follow this, right? Cash secure put, cover call. So you put, right? You put every time it goes up here, sell put, cash secure put, and then it runs up here. You put like cover call, right? So that's how I played this, and it paid me like over 3% just to put cash secure puts and cover calls, right, on this stock. So this stock has been serving me well. So I got to ask you for a favor, guys. You guys, I need your help. Let's all help each other out. I'm gonna call you guys the premium chasers now, alright? So, and then the Rothport, I guess I could share this to you guys. So me and my group, right? If you guys know me, I started a Rothport like 8K in June, right? It hasn't been doing much, but year to date, I literally made, right, from 8K, I made $1,000, almost $1,000, just running the wheel strategy on this. So you can see, not sure if you can see this properly. So I could put like screenshots on my later on my phone so you can see it more clearly. So that's the thing. So markets are soaring to all-time highs. I'm using the wheel strategy to collect passive income, and then I'm reinvesting my profits slowly and steady into some stocks I want. So hopefully that helps you out. So okay, let me wheel again, right? This port has lots of capital that's going to be ready to free up, right? This Archer is going to sell put is going to expire. So you can see this contract, it gapped up, but it doesn't matter, right? Served me well. I kept sell putting and I made lots of passive income on Archer Aviation. So you can see that when I opened this contract up, I agreed to collect 43, right? It's going to pay me. I agreed to put down 100 shares at which one? $8.50, right? Yeah, $8.50, right? So I essentially told the market, hey, I'm gonna sell this put option, right? I'm gonna sell this short to agree to buy back 100 shares if the stock trades below $8.50. So if the stock trades below $8.50 by October 31st, then I have to buy 100 shares of this. And now, as you can see, the stock has gapped up. This contract has lost value, and by next week, most likely, like 99% chance that the stock is going to stay above $8.50, right? Because right now it's $11.50. So really high chance that it's going to expire worthless, and I'll get back my full premium. So you can see this contract's only worth 9 cents left. So I got $9 more of premium that will get back to me soon. So right now, since this stock gapped up, right, where I told you red days cash secure put, green days cover call, I'm going to look at another stock, and let's see, American Airlines. This is a new stock that I started to share with you guys that I've been trying to get into. So you see, red day. You could use your trend line or whatever, support resistance, those stuff, right? Let's see. So say I agree to buy the stock at $11. Let's take a look at the premium, right? Let's go through the example of running a cash secure put. So ideally, you will set up a cash secure put on these red days. This will give you the best premiums, okay? So right now we had a few green days, but we still dropped a ton, so the premium should still be pretty good for $11. So what you do is trade AAL options. You're not buying these contracts, right? I'm an option seller now, right? So I will sell a put, and let's go out to October 31st, right? Let's go to $11. Let's take this one, right? So the delta, right? It says that I got a 33% chance of winning, 33% chance I'll get assigned, right? So there's a 33% chance, right? I don't know how they do the deltas and the Greeks and stuff like that, but the options contracts, they think, right, based on their systems, right, and probabilities, they think that I have a 33% chance that the stock will trade below $11 by October 31st. So around like 0.2 or 0.3 delta, people say is a good cash secure put. If you're more aggressive, by all means, you could go crazy, right? You're like, hey, I love buying the stock now, right? But I agree, why not? Let's collect some premium on the other hand, right? So if you really want to get assigned, you could put something like $11.50. You'll get paid a bit more on this contract too. So let's do this one, right? So how I'll do this is a few weeks out, right? I'll put my calculator up, and I'll say 0.42 divided by my strike price, which is $11. So pretty much they're giving you over 3% ROI just to agree to place like a limit order on this stock. So I agree to buy 100 shares at $11 if the stock price drops below 11. If it trades above, I'll just get free money, right? You run away with free money. So either way, they still pay you for it. So let's say review order, right? So I lock up $1,100 to get into American Airlines. Okay. So hopefully that helps you guys out, alright? And then on my next video, I guess I'll put say I have a pending order now. So I'm trying to lock in this premium deal, okay? My next video, I guess I'll go through like more complex option strategies like credit spreads, right? The spread options, right? They're basically hedges, right? Once you understand these premiums, right? People find funny ways to like buy call options just to sell them, right? They use a buy call option to hedge, so then it takes up less capital, right? But and your defined risk is less, right? So you know how much you're gonna lose, right? Instead of placing limit orders, what if American Airlines goes to 0, right? Then my limit order will keep going down and I'll lose a lot, right? But you do it on stock that you trust, right? American Airlines probably won't go to 0. If you're afraid, right, then just don't buy stocks, right? If you're afraid stocks will go to 0. But at the same time, running these cash secure puts are going to pay me. It's going to be safer than buying the share at current market price. I'm pretty much setting a limit order at a stock I want to buy if the stock goes below that, trades below that price. So I mean, you could say a limit order could go to 0, right? Limit order, oh, you got limited in, right? You got striked in for a limit order, and it's, say a crypto goes to 0. I mean, if you're scared something will go to 0, then don't be in stocks. But I like this. It's safer than actually buying the stocks, right? I could get stocks at the price I want. So let's go through some other stocks I've been saying for weeks, right? For if you look through my past video, Tempest AI, congratulations, you guys are up. How many percent? 70%. All right. So thank you for taking this trade. I was very bullish, right? When we got these people were short selling. I'm like, you kidding me? We made higher highs, higher lows, right? It didn't hit our SVG $50, but I've been stacking up shares here, and now we actually sold 100 shares out here. So congratulations to you guys for playing Tempest AI. And United Health, I'm still holding this for long term. Guess what? You guys faded, didn't you? Warren Buffett bought United Health. It never actually hit my. I was pretty salty, you know. I wanted it to hit the 2019 support zone. Never did. But hey, if you load it up right at a dip before Buffett, like the news leaks from Warren Buffett buying United Health, you're up a ton, alright? So still think it could hit $400 by next year, probably, at least. So, but every dip I'll probably buy a bit more. So I guess that's about it. Any questions? Well, with that, I hope you guys have a good one, right? Okay, quick thing. So if I say I get a sign, right, Archer, $8.50, what I'll do, right? After I'll wait for a green day, right, and then I could actually close this early, right? So right now it's 0.09. I could pay 0.09 to free out my $850 and collect my $34. But I would just let this sit for a little bit more as Archer goes up higher, and then I could close this early, right? Or I let this expire and collect my whole premium. So I could close this premium a bit early, right? Pay $9, buy to close, right? I'm buying back this contract. I pay $9 to close this, and I profit $34 instead of $43. So that's the thing I could do if I want to sell more options for American Airlines, for example. So you could always close this trade early if it's in your favor, right? We're going up. But if it's red, right? Say I don't want to own Archer at 8.5. Say it goes below 8.5. I could roll this position. So essentially, I'm gonna be putting more time against my. Right, I'll be closing this position, and I will use more time to collect more premium, back at a lower price. So it's a double-edged sword. I usually like to get assigned, right? So let's say I own 100 shares of Palantir, okay? So I'll wait for $100, right? No, say I have 100 shares of Palantir, okay? So if I want to say, oh, I want to collect premium on the 100 shares of stock I own, I'll be selling a call. Instead of sell put, I'll be selling a call. Say I'll put 180. So right now they're paying you $255 to agree to sell the stock at 180. So if the stock goes above 180, then I will sell my shares at 180. But they pay me $255 to do that. So hopefully that. But I don't have 100 shares, so this is not a covered call. This is a naked call, okay? So I could lose unlimited money, right? So say the stock rips up higher, goes up to $200, I'll be losing a ton of money, okay? But if you have the shares with you, you shouldn't be worried, okay? So naked calls, naked puts, you don't do that, okay, guys? You never run naked, right? So if you run the sell call, make sure you have 100 shares. There's also some other methods like straddle. So you could sell, you could buy, sell call, sell put, and you could pretty much find like a balance, right? And know your risk between that trade or something like that. So, but all these other techniques, I guess we're gonna share with you guys next time. So with that, if you have any questions, hope you guys you could always message me, right, on the comments down below. I'm going to be showing you my main portfolio in Roth, right? I started from June, and my Archer, right? Some of my wheels, alright? So hope you guys have a good one. I'll see you guys next time. Peace.